All right, there we go. All right, everybody, welcome back to another episode of Benzinga Live after a few technical difficulties. I believe we're live on YouTube. Let me go ahead and... was it on the original stream or is the reader? Okay, cool. All right, so everyone should be joining us here from Live Trading any minute. We have 5 founders hanging out with us backstage from different startups that are getting ready to go pitch. Kevin O'Leary, Start Engine. So let's go ahead and play our intro. And we come back, I'll bring on Eric Smith from ClockedIn. We'll be talking about how he's trying to reshape the ClockedIn process in the gig economies. And we'll talk to Eric here in a few minutes. So without further ado, let's go ahead and play that intro and get started.
This is Benzinga Live. Spencer Israel and producer AB. What's up, everybody? How we doing?
Someone told me buy high, sell higher.
Let's get Matt Hammond on the show to talk some IPOs. Jake Wojacek from Trend Spider. We have a breaking news.
All right, Mr. Smith, how are you doing today?
Hey, Aaron. Good morning.
Good morning to you as well. So ClockedIn, tell me what it is. Tell me what you guys do.
You bet. ClockedIn is focused on solving the labor challenges around hourly jobs. I know most of us, especially in the last year, have seen sparse shelves, delays in shipping, short operating hours. So what our platform does is we're building a network that connects hourly workers with hourly employers that ultimately fills the short gaps in staffing.
Yeah, so this is something that I kind of know that the gig economy, I guess, somewhat well. I worked as a waiter in college for different restaurants and whatnot. So it is oftentimes tough. And as you mentioned, it has gotten tougher over the past couple years. Do you see that, normalizing here at some point? Or how is ClockedIn, filling those gaps right now?
It's a great question. We do not see it snapping back to normal pre-pandemic levels. In fact, we see the gaps widening as everybody kind of looks to trade up to a little higher paying job, a little more virtual, right? And so what our platform uniquely does is essentially allows a worker who has experience in a chain to pick up shifts at any other location at any time. So they can function kind of like think of it as this. You can be a gig worker, but with your barista skills instead of your delivery vehicle.
Yeah, and so right now, I mean, how many, is it hard? I'd imagine it's hard for restaurants because the skills you would use at one restaurant, it would be different from a Starbucks versus a McDonald's.
Exactly. So imagine you're a McDonald's employee and today's your last day and you're going to leave your job. You can actually keep your shirt, keep your hat, keep your pay card, and be a walk-on at any other McDonald's across America because the equipment is the same, the procedures are the same, essentially the job is the same. So what our platform allows for is building the gig economy within unique skill sets, as you mentioned. Of course, there are some areas that are a little more generic, but really our platform is targeted at brands that have consistent job roles across a bunch of different locations. This is empowering for the workers as well, as typically, they're looking to pick up a second job or going back to school, or they need a sort of break from work. So this allows them the ability to not completely leave their current job, but sort of have that as a on-call earning capability for them.
Yeah, that's really interesting. I've actually I've thought about that idea for a business before, it would make sense to do that, to be able to plug people that have similar. So does and this will be my last question because I know we got to run. I'm sorry for us being cut short on time, but does it cost anything extra for companies to have, or as you put it, like walk-ons on their payroll, or how does that work?
Yeah, great question. So we pretty much just function as the communication vehicle. So we charge based upon subscription models, monthly subscriptions. So there's no incremental cost. Typically, the company is going to set a minimum participation, like one shift a week, for example. to make it worth their while. But of course, that worker can decide when that shift is and at what location they want to participate in.
Wow. Eric, well, good luck today. It's great talking to you. Hopefully I'll be able to get you on the show again sometime when we have some more time to chat.
Thank you. Looking forward to it.
All right. Have a good one, Eric. All right. That was Eric Smith, CEO of ClockedIn. Next on our list, we are going to be talking to Annette Azan, the CEO of Nuudii System. So let's go ahead and give Annette our special intro and bring her on the show. Annette, how are you doing today?
Hi, Aaron. How are you? Nice to be here.
I am good. I'm on your, so let me ask, well, I'll let you give the elevator pitch on Nuudii System real quick before we begin.
Yeah, Nuudii System is for women who hate bras but don't want to go braless. We're a freeing alternative, and we are making living with boobs easier. A lot different than Eric's company.
Yeah, it's two ends of the spectrum there.
Yes.
So I'll pull up, you can see here. So, what is, so you said your core base is women who don't want to wear bras, but don't want to go braless.
Go braless, yeah. So we're creating a completely new category called boob wear, which is living in between. And for you guys out there, I'd like to make the analogy of leggings, right? Leggings cover the same parts of the body as pants, but they're not pants, right? They fit different, they act differently in your life. And usually I would say like 90% of women actually find a place for it and can't live without it. So Nuudii really becomes a foundation of your life. So we took a fabric never used for that part of the body. It is actually a patented product. We have IP around it. And with that fabric, we were able to really simplify the fit process, and also with a very unique design, create products that have versatility that no bra has ever had. So our core product, which we launched with, which is the T system, actually you can wear it over 12 different ways. So you can wear it for different activities, but also different fashion styles, which, you know, there are many, and bras just don't work. Bras don't work, period. That's why women hate them.
Yeah, and I'm reading your bio. I see that you have a extensive background in the fashion industry. So as you've started, you know, and running this brand, I'm sure you have a very deep, you know, lot of connections you can reach out to for whatever you need. What have been the biggest, I guess, like hurdles so far in growing this brand? Because it seems I always just see apparel and clothing lines as such a saturated market, right? Everyone wants to have their own clothing line. Everyone wants to have their own brand of something.
Yes, yeah. Well, fortunately, I mean, I've had a whole career in fashion, but it was actually not in designing. It was in the business side. So, I mean, I didn't come with that, you know, fantasy of like being glorified and working in fashion, which is really not that. But Nuudii was created out of my own need for a wedding dress, and there was nothing on the market that existed. So I actually hand sewed the first Nuudii. But I knew at that time, that was 11 years ago, that the minute I put it on my body, it was like, oh my God, this is a different experience. And I put on my retailer's hat and I said, wow, if I had Nuudii in my stores, geez, I could have sold so many more garments. And I was thinking about Spanx and how big Spanx was, because they really helped the retailers sell more clothing. And so that's really what I was thinking of. And so it took me a while to get those original prototypes out of my safe and into the process of getting it produced. And that took many, many years of trial and error with manufacturers, because Nuudii is not a bra, it's not made in the bra factory, and we had to come up with manufacturing processes. So that was one of the first biggest hurdles that we had to come through. The second was, of course, funding. It's always a big issue. I mean, you know, certainly for women, I'm a woman of color, and then, you know, everybody wants to say, oh, this is a really saturated market, if they don't want to really understand that what we're doing is taking this complicated bra industry, going to a new category. And also Nuudii is packaged. It's never going to be on a hanger. So it's really taking it into consumer goods. And this year we're actually rolling out Nuudiis being sold in vending machines in malls and also in airports.
Wow. Well, congrats on the growth thus far, and good luck today. I wish you all the luck, Annette. It was great talking to you. And again, hopefully we'll have a chance to talk on a day we have some more time to chat.
Yeah. Thanks so much, Aaron, for having me. Take care.
Of course. Have a great rest of your day. All right, guys, that was Annette Azan, the CEO of Nuudii, a company trying to revolutionize the bra industry. Let's go ahead and bring on our, before I say anything I'm not supposed to, let's go ahead and bring on our next guest, Mr. Andrew Brown, the co-founder and CEO of RadWave Technologies, a medical device company. Let's go ahead and bring Mr. Brown on, give him our special intro first. Mr. Brown, how are you doing today?
Hey, good morning. Thanks for having me.
So real quick, because we're kind of crunched on time, give me the shortened elevator pitch on RadWave.
You bet. So RadWave, we make medical technology. We are the engine of the next wave of surgical robotics. So historically, we've had open procedures in medical device where you're opening up the chest, opening up the back, doing it, turned into minimally invasive over the last couple decades, and the next wave is surgical robotics. So this is the Da Vinci and all the other ones that are coming next. RadWave tracks the tips of those instruments accurately, so the physicians know exactly where their tools are when there's no line of sight.
Yeah, and so my mom's a PA that's worked in surgery most of her career, and she'd always tell me as a kid growing up, like, oh, in the future there'll be robots doing surgeries, and I never believed her. But now I'm starting to believe her a little bit more, and especially talking to you.
Absolutely. There are products out there now which are starting to be more autonomous, if you will. Think of some of the laser eye surgery, some of the pulmonology navigation that's going into lungs, which is much more automated. They actually have some that are using the Xbox controller, if you believe it. So as we hand over more and more control, you need to have more confidence in the position of those surgical instruments. And that's where RadWave comes in. We generate a field, and we can locate these very, very small sensors that are attached to the catheters and other tools, so the physicians can be really confident when they're treating or diagnosing a specific location, they are where they think they are.
Yeah, I mean, so the image guided and robotic surgery market is a $31 billion total opportunity. I'd imagine pretty much every product that gets developed in that market is going to need to know exactly where it's at in relation to a human body.
Right, exactly. Over the last decades, let's say, camera has been used so physicians could get closer to that point of interest through direct visualization. And so as you start moving that into smaller and smaller devices that may not have room for a camera, there needs to be a way to know where it is when you can't see it. And so more and more procedures, more and more devices are in that category. And that's the wave that RadWave is riding. So it's a market shift that's occurring, and we're at the forefront.
Well, I love it, and yeah, I mean, I truly wish you guys the best of luck. Because if I ever need to get surgery guided by a robot, I hope the robot knows exactly where the tools are on my body, and maybe it'll be with some RadWave technology. Mr. Brown, good luck today with Kevin O'Leary, and have a great rest of your day.
All right, thanks for having me.
No problem. All right, guys, we have to keep it ticking. We've got about 10 minutes left before the pitch with Kevin O'Leary starts. So let's see. After Mr. Andrew Brown, we are going to bring on Kate Larson from WebGap. Let's give Kate our very special intro and bring her on the show. Hi, Kate. How are you doing today?
Hi there, Aaron. I'm great. How are you?
Pretty good, especially after we got through those little technical difficulties at the first. Now we're chilling. So give me a quick rundown on WebGap.
Sure. Well, again, I'm Kate. I am co-founder and chief operations officer of WebGap Inc. What WebGap does, what we do, is called remote browser isolation. So what that means is we physically isolate your browsing activity from your PC. So you're protecting your computer from the browser. Now, we all love the browser. We know the browser is great. It is the most used application worldwide, right? But there are inherent browser threats that live in there, and we use other methods of mitigating those, like antivirus, firewalls, things like that. But all they can do is play catch up to the evolving threats like malware, ransomware, data tracking, other malicious links, and browser threats. So, again, what we do is we physically isolate you in our own cloud from your browsing session. So, when you log into WebGap, I'll kind of go through a user experience. You log into WebGap through your browser. It's any browser you want: Chrome, Firefox, Edge, it doesn't matter. You log into WebGap, and the only browser activity that is recorded on your browser is that you logged into WebGap. When you're in WebGap, you have your whole entire browser experience native to your computer. It's like you're not even using it. You're using the internet like a ghost, is kind of what I like to say.
I am obviously, like, I use a browser every day. I'd never really think about it. I don't know. So a lot
But
of
you
that,
have your own framework, right? I mean, you have things you do to protect yourself. You make sure you have good passwords. You might have antivirus, firewalls, whatever you do for your show to protect yourself, you build a framework. This is a capability tool that you're going to fit into your framework, and it's going to be mainstream very soon, because I haven't quite got to the best part.
okay.
So, okay. Yeah. Where could I go here? The White House says that RBI is the future, and this is why. There is what's called zero trust architecture, which is a framework guideline for all companies, federal workers especially, to commit to that zero trust architecture and build their framework. So, their firewalls, antivirus, whatever they have going on, build their framework to zero trust. And remote browser isolation, our tech, is specifically mentioned in that zero trust framework. That means we're a building block of zero trust. Zero trust has been mandated per a 2021 executive order by the US government for all federal workers. So to put this in a scope, in 2021, there were 18.28 million federal workers, and this is just in the US. So all of them need to adapt to zero trust, which we are a building block of by 2024. So we're kind of racing the clock to make sure that we have all the features we need and we can onboard as many people as we can, because our main goal here is mass market adoption, which means that we need to be affordable and we need to scale very easily.
Yeah, I mean, so I'll ask you, because you sound like the expert in this. I'm on the site now. Do I click accept, decline?
Yes. You click accept. What? That's just that's like the cookie banner, right?
Okay, so I'm okay accepting cookies.
You're okay accepting cookies, yes.
All right, and then so what's your background, Rain? Are you more in like coding? What is your background?
My background's operations, so I'm here to pitch. I actually used to be a teacher. I pivoted to cybersecurity because it is wildly interesting. I don't think that cybersecurity professionals get enough credit for how creative they are in order to, hackers especially too, they're very creative, right? They're cunningly creative, we'll say, especially those black hat hackers and the ones you want to avoid. And when they're creating all these programs, these softwares in order to get to you, these cybersecurity professionals need to combat that, and they keep having to play catch up. And that's where, if you remotely isolate your browser activity, it's harder for them to find you. They can't get to you. It's also physically isolating all the data on your computer from your browser activity, so nothing can crawl in through that window. Does that make more sense?
Yeah, it does. Thank you. That's I appreciate that. And I know there was just the news like last week of that. There was like a teenage hacker who hacked Lyft or Uber or something. I mean, it's every week there's one of these major companies that gets breached by a hacker, and it's like you said, the cybersecurity officials need to be one step ahead of them at all times.
Right. And, it's getting harder and harder because, I mean, as you pointed out, this is a kid. If a kid can do it, imagine what these professionals who have been there for years are doing. Right?
Exactly.
So
yeah.
It's amazing. And we get a reputation in cybersecurity for not being very fun, but it's because you only hear from us when the bad things are happening. You don't know what cool things are going on behind the scenes.
I'm sure of it. And I'd love to, if you ever have, I'd love to have you on the show again, maybe sometime to talk about just, cybersecurity insights as a whole. Maybe you can be my go-to cybersecurity expert.
Aaron, I'd love that. Absolutely.
All right. Well, Kate, good luck today with Mr. O'Leary. Have a great rest of your Wednesday, and we'll talk soon.
Thank you. You too.
All right, guys, we have a few minutes left. I've got Ian Kane hanging out Oh, sorry. I see Ian here. I see Daniel as well. I don't know which one it is. Figure it out. Unbanked. Got a t-shirt on and everything. Let's go ahead and give Ian, I'm going to go with Ian, our very special intro and bring him on the show. Ian or Daniel, how's it going?
I'm Ian. It's going well. It's going well. How
Okay,
are you?
who's Daniel? Why do I have a Daniel on my list as well?
I didn't think he was going to make the show, but if you want to let him in, you can. He's my co-founder.
Oh, let's do it. Is he here?
I think he's in the airport, honestly.
Oh, okay.
he might be there though. Let's bring him in.
I don't see him backstage right now, but if we see him pop
Okay.
back in, we'll bring him in. So give us the quick elevator pitch on Unbanked.
Yeah. So Unbanked, we've been around for about 4 years. General thesis behind Unbanked is that the blockchain is a more efficient way to transmit value, and the form of value is changing. Right? There's cryptocurrencies, there's stable coins, there's even NFTs. The scary thing with blockchain is that it's hard for most people to understand. They got to manage their public keys, their private keys, all of this stuff. And it's scary. If you send money to the wrong address, it's gone forever. What people do already use and understand on a daily basis are legacy financial products like debit cards and bank accounts. And so we thought at Unbanked, it'd be great to bring these technologies together, get the efficiencies of blockchain with the familiarity of the legacy financial system. And so if you have some cryptocurrency and you want to spend it to buy gas, groceries, or pay for your Netflix, you can deposit it to a wallet and spend it anywhere in the world. Major credit cards are accepted. Or if you want to buy some Bitcoin or some Ethereum, we give you bank accounts so you can convert from your USD into a cryptocurrency and then put it in your cold storage or maybe spend it on a card. The one thing that makes us really different and really unique is that we take this product suite and instead of building a walled garden like some of the other players in the space where they say, hey, come to our platform and use our product how we defined it, we actually take this product suite and we go to other companies, other Web3 companies in the space that have their own digital asset. And we say, hey, we're going to give you the infrastructure and the product suite to run these programs so your consumers have the benefit. We're going to handle all of the compliance for you, all of the customer service, and even things like car fulfillment and all of that. And we package it together. And so today we're working with really, really great Web3 brands like the Litecoin Foundation, Nexo, StormX Stacks. A bunch of companies are essentially working with Unbanked to launch their own crypto debit cards or bank accounts and ultimately give that technology to their end consumers.
Right. So I know that right now there's a lot of hurdles when it comes to using crypto as a day-to-day currency. What do you think needs to change, I guess, before that's more widely adoptable?
Yeah, I think that's very true, right? If you go to a farmer's market today and the person selling the potatoes accepts Bitcoin and you've got some Bitcoin, you can make that transaction. But the reality is that that's not the majority of people. However, you got Visa, MasterCard, American Express, and these card networks have 70 to 90 million merchants available globally. And so the really great thing about our product is that we enable consumers to stay in digital currency up until the point of sale. When they swipe that card at the merchant, we immediately convert it to US dollars or whatever the fiat currency is where they are locally. And we settle that to the merchant. So from the merchant point of view, it operates like a traditional bank debit or credit card. From the consumer standpoint, they get the benefits of being in cryptocurrency, but with the efficiency of that very widely adopted rail.
Nice. Yeah, and I think I remember, was it El Salvador, some country? I think they sent everyone in their country like $25 worth of Bitcoin, and the majority of people didn't use it because they didn't know how to or have a place to do it. Like you said, it's not that easy right now. So, I think we'll see that change over time.
Yeah, absolutely. It's finance is very personal to people, right? Some people like digital currencies because of the efficiency. Some people like assets like Bitcoin because of their great store value. Even the US dollar in some Latin American countries is a better store value than the local currencies. But ultimately, it has to be easy to use. And so that's what we've been very focused on is how do we give people the ability to use it quickly? So when you go to Unbanked, you could sign up. It takes 5 minutes. You immediately get a virtual card. You can sync that virtual card with Apple, Google, or Samsung Pay. We mail you the physical card. We try to make it as easy as possible for somebody to go there, sign up in a familiar UI. And like I said, get the efficiency of digital currency, cryptocurrency, but with the benefits of that legacy rail system.
Yeah. Yeah, I mean, and I think right now it's all about, that's kind of the next big hurdle I see overall for crypto, is just getting that mass everyday, day-to-day adoption, because it is hard right now to, in a lot of cases, to wire traditional money to someone in a different country, and then you have the currency exchanges, and right now the dollar is so strong and all this stuff, where it like would make sense to have some type of like decentralized global currencies that you could send without having all those other obstacles.
Well, Aaron, you make a great point. I mean, if you think about what it takes today to send a wire using your, existing bank, right? You go there, it takes, 3 to 7 days. They'll probably charge you $20 to $30. And if it's international, they're charging you an FX fee. And sometimes that can be 5%. So it's slow, it's expensive, and it's very archaic in the way it's executed. Whereas if you take a stable coin on any kind of blockchain, it settles almost instantly. It's usually, can be as low as 0.02 of a penny, sometimes a little bit higher if you're using Ethereum. And it's always settled, right? You don't have to worry about clawbacks, fraudulent issues. And so just comparing those two technologies using US dollars is a great example as to why blockchain is a more efficient way to send that value. What it comes down to is really making it familiar so that all people all around the world actually start using that, versus banking technology, which, candidly, it was designed 50 years ago and it's never been improved on.
Yeah, well, I'm rooting for you guys. My crypto wallet is rooting for you guys. Ian, good luck with Kevin today.
Thank you, sir.
And hope to have you back on. Like I said to Kate earlier, if I could add you to my list of guests I can reach out to for experts in the crypto space, I'd love to be able to do that.
I want to come back and hang out with you, man. So I appreciate the offer, and we'll be talking more soon. Thanks for having me on today.
All right, of course. Thank you, Ian. And next time, maybe Daniel will be back from the airport and be able to join us.
Yeah, he'll be on later. Thanks again.
All right, have a good one. All right, guys, that was fun. 5 founders in about 30 minutes. We talked to, that was Ian Kane from Unbanked. Then we had Kate Larson from WebGap, and then Annette Azan, Nuudii System, Eric Smith, ClockedIn. I'm missing someone. Or did we just do 4? I can't count. I think we just did 4. Oh, RadWave. I'm missing it. RadWave. Andrew Brown. We did 5. All right. I'm not going crazy. All right, guys. That's a different way that we usually start the show. We're usually all stock market, but we're doing some startups. And those are companies that you can invest in. I believe through, let me make sure I get this right. I don't know. Let's go ahead and run through the overall indices while we get the, I get the final word there. I believe they're on Start Engine. You can just go do that there. All right. Today, market's selling off a little bit after a nice 2-day rally. Why? Don't really know. Maybe it's from OPEC. OPEC, cutting 2 million barrels a day. I mean, oil prices are going to go up. Usually when prices go up, demand dips a little bit. Although oil and fuel is one of the most demand in the last, it doesn't, we need as much oil as we need, right? Let's see how my chat isn't, my chat is working. I just have to look at it on YouTube today. Not, I know, but I was trying to pop a comment up, but it's not important. S&P down 1.45% today. Other news, you had ADP reported jobs grew actually more than expected. Catching up on the chat. All right, so that's S&P 500. So you can see our WIM here. Major indices are lower as stocks pull back amid a rise in yields as well as possible profit taking. Additionally, ADP reports better than expected September job growth, which has added to concerns over a tight labor market. So right now, we talked about this before, that every single time we get bad news on the job market, it's good news for the market, and vice versa. So right now we added jobs, which you might say, hey, that's great for the U.S. economy. The stock market's going to be up. And you'd think that would make sense. I'd say, yeah, you're a pretty rational person. But the stock market isn't rational, or it kind of is, because that makes the Fed more likely to continue its rate hikes. But here is the kind of flip side. I think when you kind of read between the lines, start digging, that people aren't talking about with this ADP report. And people don't really care that much about the ADP report. So I could see, honestly, and we're never going to be able to ask Mr. Market himself, why is he moving specifically today? Is it this reason or that reason? But I'd almost bet it's more the OPEC thing, even though 2 million was expected by some people. But usually ADP, I mean, we have a lot of jobs data coming out this week, and the ADP numbers are probably ranking more on the less important side of that. Let's go ahead and pull this up from Carl. I always say his last name wrong, so I'm just not going to say it. I'm just going to call him Carl. ADP said annual pay growth for job changers in September is down from August. It's the biggest deceleration in the 3-year history of our data. So basically, people that have been switching jobs for a pay raise got the biggest deceleration in wage growth, at least for job switchers, in the history of that data from ADP. So I see that. I'm not saying like, okay, that's great news, whatever, but I think it is saying that maybe some of the wage growth concerns could be subsiding. We shall see. Again, the jobs data that we're going to get throughout the week, we have non-farm payrolls on Friday. Tomorrow, there's other. Let's go here. Let's go to our economic calendar. Thursday, we have initial jobless claims and continuing jobless claims. So the jobless claims, I think the non-farm payrolls is going to be the most important on Friday for sure, 100%. But tomorrow's initial jobless claims, if it's way higher, than expected, could be good news for the markets, or vice versa. If it's way lower expected, for the market, if it's way lower than expected, could be bad news for the markets. Let's go back to our Benzinga Pro and run through some different individual names on the stream today. We have news all over the place. News is running wild. So let's go back. Let's go to Twitter real quick. Twitter down today because yesterday it looked like, oh, for sure thing. It's still looking like a for sure thing. But now, I think some people that had gotten their profit already, maybe bought at 40 or maybe even, if we look at Twitter on a weekly chart, you can see, I believe, so this is the buyout, April 4th. We dipped a well below that. So it went up to around, it got up to, let's see, highs of 52. Sorry, but this might not be, when did he actually offer to acquire? Because he first was invested. He first invested in the company and then came in and did and then offered the full acquisition, then was trying to get out of it. But I think a lot of people, when Twitter dipped to below $40, thought, 40 to 54, that's actually a pretty decent return, especially in this market environment. When you're out there trying to scramble and squeeze and scurry your way to try to find some nice little returns, a nice 25% return or whatever it is from 40 to, no, that's well more than 20% because 20% of 40 would be 48. Or no, it would be 50. No, that'd be 25%. 20, I don't know. It'd be more than 20%. Either way, that's a pretty good investment. So a lot of people are buying it down here. A lot of people, I think, that took that have taken that profit, and now that it, looks like a for sure thing, but there's still some things that need to happen, just got out of it. Said, hey, look, there's still a chance that, some random thing comes out and then and the deal falls through, but it's not likely at this point. The market is saying, yeah, this deal's going through. It's trading at $51. Now it's probably not worth it to really try and get in there for what, $3? You want to buy us a way overvalued. Look, $51 if Twitter wasn't being bought out would be way too expensive for the stock. It's fair value because it's could potentially be worth, it's most likely going to be worth $54.20 in the next coming weeks. But to me, that's not worth it for, what would that be? 5%? Not worth it, but you see Twitter stock coming down a little bit today. Pentwater Capital, a hedge fund in Florida, put a trade out on Twitter. They put a, I want to say 2.4% stake in the company, bought over $700 million worth of the stock, set to make more than $200 million if the trade goes through. So whoever was pushing for that at Pentwater Capital, I would have loved to hear the pitch, because I assume it went something like this. Hey, look, we can buy this at $38. Either the deal's going to go through and we're going to make a quick 30% in a market environment that's increasingly tough, and we're going to look like geniuses for doing so, or the deal doesn't go through and we own a bunch of this stock and we put $700 million in it, and now it's worth $500 million. But if we just sit on it, maybe the stock will come back a little bit and we can sell some of it. You know, I don't know. Or maybe he had a hedging strategy to where if the deal went through, if the deal didn't go through, you know, I don't know what the trade was, but either way, it looks like it's going to work out for them, for Pentwater Capital, hedge fund down in Florida. Let's check out Tesla shares today. Of course, Tesla shares were down big yesterday on the assumption that Elon Musk will have to sell more Tesla shares in order to acquire Twitter. Tesla now down 6% today. So if you guys recall on Monday, this was a big red flag to me. Sorry, I'm on weekly candles right now. This was a big, big red flag for me on Monday when the market was having a very, very strong day. And Tesla was down big because, yes, it missed deliveries and it's not good news. But do you think, you know, if people were really stoked about the medium term to short term outlook for Tesla, you know, on a great day like that was very risk on, where people would kind of brush that news off. I think in different market environments or in times in the past, the market would have brushed news off like Tesla, like it was you know, like it was nothing, like it was just a fly, and it was pushing it away. I don't think, you know, to me that was a big red flag that, hey, maybe this is a bigger deal. That's a bit, yeah, that was a big red flag to me. The chart looks really ugly. I mean, if you can't hold this support here, if you zoom out a little bit, you've got a ways to go. You can kind of, it looks like we're kind of establishing a trend line on, you know, I don't know. Can you do that? So maybe you come back up, test this trend line, come back down again. Let's throw some indicators on there. What indicator should we use? 200-day moving average. What about the MACD? What about the RSI? What are your guys' favorite indicators? Well, I mean, Tesla is getting a little oversold. I'm not saying it's time to get into some YOLO Tesla calls, but it's getting a little oversold, it looks like. It's like every other time we've gotten this low on the RSI, Tesla's had a nice little rally. But is this the end? That's the question. Let me know in the chat what stocks you guys are watching. I see Shannon's watching XOM, Exxon Mobil. Woo! Very different from Tesla. RSI is getting pretty pretty high there. I don't know. I've said it before on energy stocks. I'll say it again. I think it's as simple as if you think we're heading toward a global recession, you don't buy these stocks. But if you think we aren't, then you can do it. And you can buy these stocks because I think energy is going to remain. I think it's going to remain restricted. Wait, I'm so confused. I have no... I'm really confused. Oh, well. See what other news we've got going on. Let's check out Apple. Let's check out some of the other big stocks today. Apple down only 1.3%. So you can see, I like looking at the RSI of the different big stocks right now. Tesla's the most oversold one I can find, honestly. Okay, I was so confused because I'm on my Robinhood right now. And it said like completed transfer from my broker or from my bank account. And I never remember, but it says October 4th. And that was yesterday. And I was like, I didn't deposit money from my bank account into I was like, is Robinhood like screwing me? And then I clicked on it to like expand it and look at more details. It says initiated July 12th. That was 3 months ago almost. And now it says the transfer's complete. Is that how long it takes to transfer? I mean, it let me have the instant access to the funds, but wow. I'll be honest with you guys. I gotta be honest with you guys. I'm always honest with you guys. I might buy some YOLO Tesla calls right now. And I hate I'm like the biggest who's wrote someone got my thing playing out loud. But yeah, even you guys know I'm like the biggest Tesla bear. Don't like Tesla long term. But right now, I like if we get a good bounce tomorrow, it's tough because you're basically gambling on the jobs numbers. That's what it's going to come down to. The market being up or down tomorrow. And Friday. More so Friday compared to tomorrow. Oh no. All right, I'll let you guys know which I'll let you guys know which Tesla calls I get into. All right, screw it. I'm going with the 260s that expire Friday. We're locked in. I haven't seen Tesla run in a while, like truly run, so. I don't know who would want to own I don't know who would want to hit. I don't know who would want to own. Well, I don't think it's actually going to hit 260. I don't need it to. I'm just hoping it rallies like throughout this afternoon. Tomorrow, I'll sell it. I don't really know who wants to buy Tesla stock right now. Like, I'm literally playing this for like a 1-2 day rally. I don't know why you would want to own Tesla stock in this environment where it looks like global demand could be weakening if the Fed continues to stay tight, right? It doesn't seem like to me Tesla has if Tesla is able to maintain its growth it's had over the past 4 or 5 years in this environment, then something fishy's got to be going on with the accounting. There's really no way. And then that's what like most analysts have said is you have to expect some sort of downturn. Elon selling the stock, that's not going to be great news for the stock. Tesla could rally. I mean, because that's the expectation now and the stock moved down, if it's announced that Elon Musk has different investors that are teaming up with him, I'm talking to, so I'll clarify, Aaron Brad, I'm talking against Tesla in a it has like holding the stock in like a medium term. I obviously any stock can when a stock gets oversold, it can rally. It's Tesla right now is down 17% in the past week. Tesla is in the S&P 500. The S&P 500 is up 1.63% in the last week. I'm not saying that's a good sign for Tesla. It's a buy signal. If anything, it's a sell signal that it's been showing such relative weakness against the market. But just because I think Tesla is going to continue to move down doesn't mean I think it's going to move straight down. See, Krassy, that's what I think, and I can't pull up the comment right now because of issues with our service, but that's what I think is the bigger problem for Tesla. Tesla just missed on deliveries for like the first time in how long, and it wasn't because, or at least the company said it wasn't because of demand, it was because of supply issues. What happens if you have those supply issues mixed in with a drop of demand? It's crazy to think that demand is going to remain the same for Tesla as more competitors enter the market, right? As interest rates rise. Interest rates rising are way bigger of a deal for mortgage rates for borrowing for a home than it is for a car, but it still increases car payments. So if you look at how much that impacts like buying a $100,000 Model Y Tesla. And I'll say this, and this is very anecdotal, just from what I've seen on Twitter and stuff, not only have I seen kind of a more anti-Elon sentiment shifting, and that, again, that might be people that are just upset with him buying Twitter. Granted, as a huge user of Twitter and ardent Elon hater, I really could care less because I don't really think, and if he makes like the Twitter source open source, like he says, or does some of these other things, I don't think it'll be bad for the company, and I don't think most things will change really. And I've talked about that at length on the show before, kind of that, it's great in theory to say, oh, I'm gonna have this be super. Hold on. What were we talking about? Can you guys stop with the Slacks? I gotta mute my Slack somehow. It's going crazy. It's Yom Kippur. All right, so some inside baseball right now is what's going on at Benzinga. It's Yom Kippur. I'm not supposed to be here at the office. But you guys are more important to me than God is, so I'm here with you guys. Michael Murray, though, is observing and fasting, and just to rub it in his face that he's fasting, Randy over here is messaging about Shake Shack. Okay, I remember what I was going to say before. So my thing with Elon with Twitter is it's really great in theory to say, oh, we're going to have like a free speech platform and we're not going to censor any speech. The thing is that it doesn't, there's like legal reasons and whatnot. It doesn't exist like that today. And I feel like Elon's going to run into a lot of the same problems. I don't foresee Twitter really changing that much. And if he does make any huge changes, anytime Twitter does something as simple as like change the feed a little bit, people freak out. So if he substantially makes any changes, unless they're absolutely amazing, then I obviously would like it because they're amazing. Otherwise, he'll get a lot of backlash for it. But as a Elon supporter, or Elon hater, I don't really mind the the Twitter acquisition. Yeah, I was gonna say. So I've seen sentiment starting to shift on him. I wouldn't even say I'm really an Elon hater because I'm a Tesla shareholder as well. But there's so many Uber drivers in Philly waiting for their Model 3 deliveries, they could keep up demand on their own. Really? I've seen a lot of anti-Elon sentiment on Twitter shifting over the past 6 months or so. I mean, there's been a bunch of stories over the past year with Elon Musk, but what I've started to see is more and more actual negative things being said on Twitter about Teslas, not just Elon Musk. There was a tweet that went viral the other day where someone said, imagine if your car was also your printer. That's like what owning a Tesla is like. There was also one with a guy tweeting yesterday that he, the Tesla he bought arrived damaged. He tried to get a refund. They took the car back, but haven't given him a refund yet. So now he hasn't had either. I think Jay Rice, Uber, there's I don't know. Uber used to have a deal, at least in California with Priuses and stuff, where they would if you drove a certain amount of miles, you got a huge discount off of your car. Yeah, here, let me find the tweet that. I don't know. I can't find the tweet from the guy who. I could probably find it. I could probably just search Tesla refund. Let's find it. How is Tesla doing since I bought my calls? I honestly haven't even looked. I think it's up a little bit, but not enough for my calls to be up yet. If we push, I mean, guys, this could be a nice little 2-day trade if this works out for me. I will take profits, by the way. I will be. I need to be like Bart from The Simpsons. When he's writing all the things on the whiteboard. I need to just do that and say, I will take profits. I will take profits. I will take profits. By the way, I just got a. Okay, I'm still hearing myself. Where's that coming from, Leah? Can you mute it, please? Figure out how. I can't keep talking like this. I just got a text that says from USP, not UPS, USP. Your items cannot be delivered due to wrong address. These are scam texts. Do not answer any of those. Oh wait, where's Rohan? How did we do? I'm trying to figure out. So I'm gonna start doing a Twitter. Remember we did that Twitter space, but did it during the show. So we were streaming the Twitter space to our streaming platform, and I had this mic muted, so that if I talked in the space, it would be okay. Is that how we did it? Okay. I was trying to figure out how to simultaneously be in a space and on the stream at the same time. Quantum's asking what's up with Credit Suisse. I'll be completely honest. I have no clue. I mean, dude, this thing was up. Let's look at the dailies here. This thing was up 12% yesterday, 2% the other day, all on news that it might not actually go bankrupt. Not that things were actually going well, but just that, hey, it looks like things aren't going to go potentially absolutely bankrupt. So it makes sense that it's kind of coming back down today. A Model 3 is $1,000 payment a month. All right, Crassy, so how many miles would an Uber driver have to drive to pay that $1,000 a month? Probably not. I mean, I don't know. That sounds... Wait, conservatively, that's $1,600 a month in expenses for a regular car? What type of car are you driving? My car payment is like $300 and something a month. I probably pay like $100 in gas a month. And my insurance is like $100 a month. It's like $600 for 6 months. Or no. Sorry, it's more than that. It's like $900 for 6 months. So $150 a month for my insurance, $100 on gas. My total car expenses per month is probably more around $500. I don't think most people are paying $1,600 in car expenses a month.
I'd say mine right now, 500 car, and then probably like 150 for gas.
650 total, Aaron Thomas is saying. Yours is about to go up though.
No, I'm not getting any car.
At all?
No, they're not totally my car.
Oh.
So I had to pay $1,000 area. I'm just gonna keep my cost down on the ride.
Is your insurance gonna go up?
Probably a little bit, probably like $40 or something.
Aaron Thomas was in an accident. Crassy does Uber on the weekends. What is this show about? The show's about stocks. We're talking about cars right now and car payments. I'm talking to someone off stream that you can't hear, so that's probably not great TV or radio or whatever you want to call it. Josh Pitt saying DoorDash Uber workers make less than minimum wage after vehicle expenses. Yeah, I think there's a lot of, if you hear Jim Chanos talk about the different, and granted, he's short these companies, or he was short Grubhub or DoorDash and stuff. So granted, he's biased in it and that he's short, but he brings up a lot of good points when you talk about that, Josh Pitts, and you break down the cost. It doesn't really make sense for a lot of these workers to do these jobs without benefits. The companies can't afford to pay. I mean, they fought in court in California to not have to classify workers as employees. And granted, a lot of the drivers don't want to be considered employees. They want the benefits that come with being an independent contractor and being able to bounce in and out. But for ones that work over 40 hours, that want to get benefits. So it seems like, I think the benefit really isn't there for a lot of drivers. And if they do start incentivizing it, it probably makes the product cost more to where it then isn't worth it for the customer, right? Because if they start paying the drivers more, then all of a sudden, your McDonald's that was already going to be $25 is now going to be $30. Uh-oh. God damn it. Market pulling back right after I bought my Tesla calls. It's okay. It's okay. No one freak out. Wait, why? Oh, wait. This is it's not even Tesla. It's okay. Don't freak out, Aaron. Don't freak out. Guys, all right, let's check out SPY. Quantum saying SPY is holding 372. Remember, we were looking at some important levels yesterday. We've got about 180 people watching us. I need 100 likes before I get lunch today. I'm not even supposed to eat lunch today, but I'm going to. Let's look at SPY on the 5 mini. What is this line? I don't even know what indicators I have on right now. Moving average, 9 close. Let's get that out of here. What do I need? What indicators do I need on here? 372. Should we buy some SPY calls too? No, because they don't have SPY calls that expire tomorrow. All right. I'm going to see if Gav from Wolf Financial wants to hop on the show for a few minutes. We were supposed to have an in-person oh, damn it. All right, that's fine. Actually, that's good, Randy. I didn't get my Shake Shack order in, but it's good because otherwise, it would have been just sitting there for an hour. Holy cow. Waiting until Friday. Oh, wait. Are we still looking at the 5-minute chart here on S&P? We are. That means Tesla's coming back a little bit. Hopefully. Oh, yeah. Keep going. Keep pushing. All right, guys. If you're just joining us, I bought Tesla calls, which is very out of the ordinary for me. I'm a big Tesla hater. Not really a hater. I don't even know. I'm a hater of the lovers of Tesla that just blindly love everything Elon does. Because that's my whole thing, is you got to be able to be critical. If I'm an investor in a company, right, if you look at people like Carl Icahn, they become investors and then they talk about what they hate, what needs to be changed to make that company better, right? And I don't feel like investors with Tesla do that. They do the opposite, where instead they say you can't say anything about it, whatever, you know, or say anything bad about it. You got to love it. You got to love everything Elon does. I just don't agree. And also, to those of you saying this has no chance, Tesla has no chance of getting back to 260 by the end of the week, let me remind you of what we're dealing with here. We are talking about the company that has gone up in a single month, 32% in July of 2022. That was just a few months ago. 43% in October 2021. In 1 month, 43%. In this span of 3 months, it went up 46% in 1 month, 24% the next month, 12% the next month. That is 75% in 3 months. This thing has made insane moves before. It could be over. The run could be over for Tesla, but I'm trying to ride it one more time. People who want to change Tesla don't understand Tesla. I don't even want it to change. I just don't think it's worth how much it's the stock is right now. Huge candles in Apple and Nvidia. What type of candies? Talking 5. Oh, woo! Woo! What's going on in Nvidia? Ladies and gentlemen. We are popping in Nvidia. Not popping, but look at this. These are 5-minute charts. We hit a bottom at around 10:30, and Nvidia's gone from 126 to 130. Nvidia's ripping. What's going on? Randy's going to hit me with some news in a minute. Oh my God. He said I got to read the news feed to find the news. I don't know, guys. I don't know anything. I wish yeah, looking back, I wish I would have bought those calls in Nvidia, not Tesla. I mean, sheesh. That's a move. Hold on. I'm going to send the link to Gav on Twitter. Trying to figure this out. All right, just messaged Gav the link there. All right, so what is going on with Nvidia? Why and why is Tesla not participating in whatever the hell's going on? Ugh. I want to get out. I can't though. I gotta hold these till tomorrow. Oh, I hate that. I hate it. I bought See, I did something stupid there. I shouldn't have done that. I bought the Tesla calls. I should have bought them. I mean, we'll see. We'll see. I'm not gonna call it a bad trade yet. I'm gonna let it keep riding. But that's not good news to me that Apple and Nvidia like started ripping and Tesla didn't. Because usually, I mean, look at Apple right now. Oh my God, what is going on? What is going on? No, I don't even. I'm not like. There's a bounce in like all these tech stocks, it looks like. Look at this. Holy shit. I'd be up so much money if Tesla was just doing the same thing. Oh! 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 Go! 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 All right, I'm up. Oh man, I'm up 20 bucks on the trade so far. I'm up 20 bucks on the trade. Woo! In the green. We are in the green, boys and girls. Baba up. Let's check Baba. Whoa! What is going on? Someone give me the news. What's going on? What is going on? Look at this 10-minute candle. Can we get... Oh! Woo! Got my up 10% on my calls right now. All right, guys. So 10% is your average, S&P return for the year. Or if you would have tailed my Tesla calls that I gave out 20 minutes ago, you'd be up 10% in about 20 minutes instead of having to wait that full year. I'm just kidding, obviously, because most of the time those trades don't work out like that, and you would not be up 10%. In fact, you'd be down quite a bit if you were following all my trades recently. Although, all right, looks like they're coming down a little bit. They're chilling. That's fine. That's fine. Maybe it's just risk on. Maybe it's just people are like, hey, let's hit and let's take on some risk. I don't really know. Coin, I see someone's in coin calls. I mean, yeah, look at this. Coinbase coming back. You'd have to risk your entire portfolio. For what? I would never want to risk my entire portfolio. Tesla. Keep going, baby. Keep going. Go. 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 This is kind of fun. I might start trading more on the show. I haven't done that in a while. All right, Coinbase. What else are people looking at? Also, today we got this new screen cleaner stuff off Amazon, and Aaron Thomas cleaned my phone screen or my computer screen, and I don't think I had ever done that like thoroughly on this laptop. It looks like a different computer. Like the Retina display is on full display for me now, finally, on my Apple computer. So shout out Apple for a nice looking screen that's now clean for the first time. We're up $40, 14%. Again, if you got into this trade, for those of you guys who think I'm lying, I'll show you proof. Oh, it just went down. I wasn't lying to you guys. I promise you, it just said 40 a second ago. But hey, today's return, 10%. We got into those calls. Oh look, it's back up 40. We bought those calls 25 minutes ago. 14%, 25 minutes. We're going for 100. I'm just kidding. I don't know. Maybe not. I have no clue. All right. I see Gav hanging out backstage. Let me go ahead and give Gav our very special warm welcome. Bring him on the show. My glasses back on. So without further ado, we'll bring on Gav from Wolf Financial. Mr. Gav, how you doing?
Living the dream. Morning, Aaron. What's going on?
All right, so give you guys, our audience, some inside info. So Gav and I we're trying to test right now or figure out the best way to do a space and this show simultaneously, because we want to start doing one on Thursdays where we can talk some fantasy football, so maybe NFL bets. So I remembered I did a space on the show before, and here's how I did it. Essentially, I broadcasted the space from the desktop. So you can listen into a space from desktop, but you can't speak. So what I did was I shared my screen to Twitter while the space was playing, muted my mic here so people could hear the audio from the space, had my phone out so I could speak into the space, and then people could hear me while they were listening. So everything worked out fine. And you could even come on the show, Gav, too, and do the same thing where you come on the show here so people can see you, mute your mic on the show, and then just talk in the space. Maybe our audio syncing would be off, but I think outside of that, everything should work fine.
I'm down to give it a shot.
All right, yeah, we'll give it a shot tomorrow live. And again, you can just join from the space and don't worry about coming on this show at all, and you will still be on the show via the space, if that makes sense.
Yeah, absolutely. I hear, man. Interesting week ahead to talk a little bit on that side. Did you want to go over anything there? You want to talk some market, because it's looking real interesting.
You said interesting week ahead, NFL wise or market wise, or
yes, NFL wise,
okay,
but market wise as well. I'm watching those Tesla calls that you're in.
Oh man, I haven't even checked since you came on. How are we looking?
Yeah.
Oh my God, I'm up 50 now. Just like everything started ripping out of nowhere, and I don't really know.
Yeah, well, the big rip came, if you look, SPY got back up to its daily VWAP, and then it was basically just sitting on that VWAP. It broke through it on 1135 candle, and then it had a very classic pattern here where you have the break of the VWAP, you have 2 red candles on the 5-minute, and then you break back above the VWAP on that last one, and that's often where I'll enter right there. I'm also watching a parabolic star, but then we got a little bit more chop, and probably people got scared out on that 12 p.m. candle. But anyone that took the entry there after that little pattern setup and stayed in it, obviously you're just ripping to the upside right now.
Yeah, and let me go ahead and pull. I'm trying to get my Benzinga Pro pulled back up instead of this Twitter screen. I don't know if it's helping us. If you have a screen, I don't know if you're on a computer, but if you have a screen you want to share, more than welcome.
I do. Do you want me to share?
Yeah, if you want to.
Sure. 100% screen. Yeah, let's try and make this work. How's this?
Wow.
Can you see this?
Yeah, let me pull that up. I was just showing. I'm looking at Tesla in the 10-minute, guys. This is right about when I bought those calls, BT dubs. I'm actually not trying to flex because it was just really lucky timing so far.
Nice job. So yeah, you can see right here what I'm talking about. So here, I'll remove this alert real quick. All right. So right here, this blue line, the daily VWAP coming. I have it tagged to pre-market, but you could just tag it to 930. It's pretty similar regardless. And so you can see, we break below it here, just kind of drop off, and then it's all just work throughout here to get back to that daily VWAP, because this is where most of the money trades during the day. And so you can see we break through it, we have a close above it, and then pretty classic pattern you'll see often is the close above, and then 2 red candles inside of this first green candle. So both of these you can see are both inside of this candle, and then another green candle, and then this is typically when this one closes above the VWAP, this is the entry point right here. And then you can also see the parabolic star is kind of helpful because these little dots underneath is showing bullishness throughout. And basically then you just have a little bit of chop. So obviously if you took this, you would be down a little bit right here. But if you waited inside of it and you just stayed, then that next close above the VWAP shot you higher. And you can also use a couple other pieces like I was also using. You could see this 21-day as just a little bit of downside protection once we got through. So you can see it bounces right up off of it. And now we're just continuing to the upside. And then I think right here, our 200-day is going to be that next point that I'm watching for potential resistance. So just a little bit on this. This pattern's been really happening a lot, though, where you have the green candle to close above VWAP, 2 red candles inside of that first one, and then another green candle. And then this is typically a really nice entry point.
Yeah. So I know you have a more kind of traditional, or you had experience like working for Goldman Sachs and stuff. How much of does your technical charts knowledge come from that versus like things you've picked up kind of after just trading?
Yeah, like 0%. When I was working at Goldman, I was working in private wealth management, and there's not a lot of trading that's being done in your client portfolios on a day-to-day, and any of it that's being done is not being done. So Goldman's very differentiated by branches. So when you're working in PWM, you're not necessarily working with like GSAM, right, which is more asset management. My role was more client facing. So like client calls me, they're like, hey, why is the market down 3 points, 3% today? And it's my job to just kind of give an answer, talk through the macro, that kind of stuff, not necessarily to go in and day trade their portfolios. So all of my technical really came from Twitter Spaces, to be honest, just sitting on there. I mean, at this point, I've done thousands and thousands of hours, maybe like 4,000 hours, a few thousand of those hosted myself. And a lot of that's been live trading, and it's just been picking it up. But to be honest, I'm just excited to see where I'm at in like 5 to 10 years with technical analysis, because I look at these people that I learned from who have decades of experience, and it's just so clear how much more they see and how much more they understand these patterns. So pretty excited for what's to come, but it's been a pretty intense boot camp just learning through Twitter Spaces.
Yeah, and I mean, I'm kind of in the same boat where I've never been taught through like more of a like in any sort of serious educational way technical analysis, but I've just picked up here and there from different, interviews, YouTubes, Twitter Spaces. What do you get? It has sort of been. Have you felt, as far as overall people on financial Twitter Spaces, people on FinTwit in general, have you felt sentiment start to shift at all? Would you say the majority of people still pretty bearish, or what are you seeing kind of is the pulse out there right now?
Yeah, I think definitely overall sentiment is certainly bearish, and that's following the trend, right? We're currently in a downward trend in the market, and we have been really since the beginning of the year started, and that trend hasn't necessarily broken. We've not set any new all-time highs, so there hasn't been a reason to believe that it's necessarily been broken. And you could also just follow the trend line. If you just here, maybe I'll just show this as well real quick on my screen, or I guess you can kind of show it on yours. If you have S&P up, just kind of go back to the beginning of the year. So if you just kind of like zoom out a little bit, and then you just draw a direct trend line just right from there. Yeah, on what is it, January 3rd, and you could just go through the highs of March, and then you can just go through right on that high of August. And so, yeah, exactly right there. So really that you want to see that get broken. And I think that's what's going to flip back to some bullish energy in the market if we can come back up through that line. It's about as simple a trend line as you can draw right there, right? And just shows, hey, we're in a downward trend. We're just continuing to set these lower highs. This isn't good. And then on the other side, it's a tough macro environment, right? It's not just the US. The rest of the world's in a lot of pain right now. And you can see that by Australia, the European Central Bank, and multiple others making rate adjustments, starting quantitative easing, other pieces. And that carries through to us, right? A lot of our companies generate a good amount of their revenue externally outside the US. So ultimately, it really affects our company's fundamentals and so on and so forth. And then there's just other pieces, right? You saw OPEC today making a move with oil and other pieces, and the Fed continuing to reiterate that there's going to be no rate cuts next year, which is probably a good move, but we'll see what happens. So yeah, overall, the sentiment is bearish. We had a couple of green days here back to back, but I don't, besides Kathy Woods, I don't think too many people flipped bullish from 2 green days. I don't know if you saw it. Did you see what Kathy did yesterday?
I saw she bought a bunch more Tesla, right?
She bought $32 million of Tesla.
I bought
Tesla's
a couple
down,
hundred.
Yeah, Tesla's down 5% today. That's a over $1.5 million loss in a day.
Well, in a day. Yeah, if it's up 10%
but
tomorrow,
I'm just saying, like, I don't know how many other fund managers came in and bought $30 million plus of Tesla off of a 2-day green day bounce, right?
No.
Overall, I think most of them were still pretty bearish in this market. You can look at the option chain if you just want to see confirmation of that. You can look at insider selling. All these major firms, show me more than like 5 where insiders are buying stock right now. It's just not happening.
Any stock or Tesla, you're saying?
Majority of them. Majority of these large caps, it's just been selling all year. I mean, Tesla has an immense amount of insider selling. They continue to sell, but even other larger significant firms, you can go take a look at Microsoft. I think there's been 1 purchase this year. majority selling. You could take a look at Meta. Obviously, they sell like every single day from Meta. I mean, Meta is just one of the most ridiculous insider sellings you'll see. If you go and look at just every single day, there's more selling. So on and so forth. You can take a look, I think, at Apple too. Let me take it. Yeah, Apple only sellers pretty much this year. So the insiders kind of see it too. I would love to see some insider buying kind of start happening and generating, because that would be a great indicator of what's going on. But overall, downward trend, rough macro conditions, relentless Fed, insider selling. There's a lot of pieces lining up here. And the technicals, right, which we've talked about. So I would be just very intrigued to see that trend line, which you just drew, get broken. And I think that would be a potential flip back to the bullish area. But there's so much work to do to even just get up to there. We're way below the 200-day moving average. We're below every anchored VWAP that you could throw on and really point to as a piece. And then if you want, have you taken a look at the 200 SMA on the weekly?
We're still talking about on the S&P 500, correct?
Yeah. Go on your
All right.
weekly.
200 or
yeah, the simple moving average.
I don't know if we have the SMA you said?
Just the simple moving average, yeah. So
Okay.
yeah.
Let's see. I'm not
moving average is fine. It'll just no. Do they just have, they don't have simple moving average?
No, we
They
do.
got
Right
it.
here.
Yeah, moving average. Yeah, that'll work.
Not smooth, right though?
No. Just moving average.
All right. Okay, moving average.
And make it the 200.
All right, wait, hold on.
They'll want you to set your time frame on there. Yeah, so it's a 9-day right now. So make that the 200.
Length 200, close?
Yeah, that's fine.
Okay. You're teaching me a lot already about oh wow, so we're right on is that what you were trying to get me to see, that we're right on it right now?
Yeah, look at that. So you can see 2008, that's where we bounced. Was
that
or
was
actually not all the way back to 2008, but this is I mean, this is a pretty key line when you look at it and you pull out on that weekly. So just doing it on my screen too. Yeah, so you can see going all the way back.
Oh, we bounced off it perfectly in 2018.
Exactly. Bounce off perfectly on that dip, as well as back in 2016 pretty much. And
right here, yeah.
And if you do the same exact line on QQQ, which obviously is a little bit less diversified and more tech focused, this is the first time that we've broken the 200 SMA on the weekly on QQQ in 12 years. Was last week.
That, I mean, but that in itself would make me, and I don't know what I'm talking about, would make me think bearish that we broke that for the first time in that long.
100%. It's not a great sign. So this week's super key, because this week we had those 2 green days, which got us back above it, but now we're seeing selling, right? And if we see a second candle close below here, I think that leads to a bit of a steep drop the next week.
Wow.
So those are just some things which I'm looking at when you really people always tell you, zoom out with the stock market. Well, you can do technical analysis on a zoomed out picture of the stock market as well. It's not showing pretty things right now. So I really do think that this is a big line in the sand. And you could see SPY bounce right off of there, right to the upside. And now it's trying to claw its way back on the weekly. We'll see if it can hold, right? Because it didn't hold in COVID, and it just kind of dropped through. And that's where we got one of those really rough weeks there. And if you go all the way back, right, of course, to the financial crisis, obviously it really didn't hold there. We gave it up. We had a small push to try to get back above it. And then the end of 2008 into the middle of 2009 happened right after that. Now, obviously, different conditions. There was a bubble of a housing market and other pieces. But just going off the pure technicals, it's not a great looking chart right now on the daily or the weekly.
Yeah, and I think, like you mentioned earlier, just the global macro outlook is tough right now. It's not just the U.S. And in fact, it looks, at least so far, like the U.S. at least is, at least if anything, we're in a better position than a lot of countries around the world. But that is, can't be the case for everyone. So even if we're fine, but if Germany and England and Italy are struggling, those ripples could be felt in our American U.S. companies and Apple, Tesla, you name it. What do you think? I mean, do you think it's as simple as like the Fed, central banks? What would you need to kind of shift your macro outlook to think, okay, maybe things aren't so bad right now and we can start to get bullish again?
Right. I think it's going to take time is going to be the biggest factor, because we need some of these economic reports and data reports that come out and show things like that we're not having, substantial rises in inflation still, right? We want to see that come down. We want to see job reports where we're not having substantial rises in unemployment. There's just pieces, and some of those things just take time, right? We only get, maybe one a month or whatever it is, and we want to see what happens with that next Fed meeting. We're not really having an FOMC meeting, I think, till next month. So, there's a little bit of a break here. Ultimately, it's just going to take time, and that's why, the smartest traders that I learn from on a daily basis, right now, they're calling this a base hit market, where the goal is tone down your position sizing massively, have a good amount of cash on hand, and just wait a little bit, because although, we're saying, hey, we're bearish, you got to look at the stock market and realize that so far this year, it's down. I mean, it was down 25%, right? When it was at those lows just a few days ago. That's a massive drawdown. That's, one of the largest drawdowns in history right there for a single year. And so although we may say, hey, we're bearish, we're continuing to go down with this, the largest rallies happen in bear markets, right? It's that ripping upside as some of the shorts cover and stuff. So I'm trying not to, get too decisive one way or the other. I'm really maneuvering on a day-to-day basis with small position sizing. And depending on the trend of the day, either coming in with, the longs or the hedges. And then I'm also just trying to find areas of the market that are really showing relative strength. So for example, today, I think it's pretty clear that oil, gas, energy, those areas are showing relative strength. One of my favorite names there right now, I'll actually throw this one out on the show here, VIST. And also OPEC today had some news come out that's been pretty bullish. They're cutting supply, so that's helping. But yeah, I mean, this is just one of the most bullish charts that I've been looking at. Yeah, if you go on that one day, looking real nice here, just broke above those recent highs, as you can see there. So this,
Oh yeah,
we're
literally right at previous.
It's all-time highs.
1082. Yep.
Yeah.
Well, we need to get one more cent higher. I think it was higher earlier, but we need one more cent, and then we're all-time highs.
Yeah, I think today's all-time
we got
highs.
it. 1083 right here.
There you go.
Vista Energy, new all-time highs. Whoa! One of its biggest investors, Gav, is on the show. No, I'm just kidding.
It's $1 billion market cap, so I hope I'm not one of the biggest. Yeah, but this is the type of stock that I want to go ahead and look for, because this is a stock that is really lining up on several different areas that I look for. So first off, the valuation is great. This is an A+ company from a valuation perspective. They are really emerging into the top tier of LATAM oil producers. So they're capturing a specific market as well. And they've just continuously had really strong earnings, right? You want to see that. Like, their revisions are an A in my eyes. They're not just like consistently lowering future expectations. They're not lowering ahead of earnings. They're staying or even raising, right? There's great momentum, which is a really important thing in this market. Momentum matters. When a stock is moving like this, that's important. That's going to draw eyes on it and money. When a stock sets new highs, all these people on Wall Street get a ding, ding, ding. This stock in a bullish sector at the moment is setting new all-time highs. Pay attention to it, right? So it's going to draw eyes in those areas as well. And then outside of that as well, it's a great growth company. Right here, I give it an A on growth. The one thing you can maybe look at is just like profitability could be even better. But again, it's still beating on EPS. It's beating on other areas. So in a market like this is the type of company that I'm trying to look for. And I'm not necessarily saying that I'm just like buying and holding throughout. I could even day trade this, be in and out. For example, that news came out today that it was with the stuff with OPEC. So the stock dropped a little. And so
I didn't understand that. Like, Chevron and all these other oil companies were down right after the OPEC announced it was going to cut 2 million barrels a day. And then I was like, that doesn't make sense. These things should be up. And then they went up.
Yeah.
I was like, oh,
I think it was just a news. I think it was just a news reaction. Whenever news comes out, sometimes there's just large purchases or sellings. Because just a reminder, a lot of the actual moves happen from some type of AI or computer that's taking that and inputting it and then making a buy or sell decision based off of it. So there could have been some quick moves, but like you said, it did end up coming up to the upside here. So I actually added to that position around, let me see, positions. I added to it today. I'm not sure exactly where. I'd have to, here we go. 10:33 a.m. So Yeah, so I saw that drop, and then I, intraday saw it was coming back up, was looking for it to break above daily highs and just added to it, and then it broke out there. And that was just with shares too. You don't need to necessarily be trading options on everything.
Yeah.
So yeah, just like pieces like that. So like, yes, the market is bearish, and yes, smaller positions, and yes, cash is position, but you can still look for the bullish sectors within and find companies that have great fundamentals, great technicals, great setup, and lean into those. You don't have to, scalp Tesla every day, although clearly it is working for you on today's. Although I will say, I think that it's been coming down a little bit since we've been talking.
I think so too. Let me check. Give a quick. I'm still up $20 on it. Still up 7%. I have to hold it till tomorrow anyway because I screwed up on my Robinhood and I can't even sell it today if I wanted to. So I'm in it for the long run at least.
I've been watching Square here today as well. Looks pretty good here. I've been watching that since this morning.
I love that, Gob, that you're trying to find these pockets of strength, because I think people overlook this a lot of times. If you think about the whole nature of the markets and of the financial world, it's all so cyclical. And anytime you have money flowing out of certain sectors, you have money flowing into, it's always growth is out of favor. And now, we're buying value. Although we did hit that period where it seemed like everything was going down. Didn't matter if it was growth, value, bonds, stocks, whatever. But like you said, a lot of times the best time to buy is in a bear market. And like when we had, you saw those stats that said this is the worst year for a 60-40 portfolio since 1937 or something. And it's like, all right, guys, do you think this is going to continue this way, or at some point you like revert back to the mean? And if we're already on the worst pace since 1937, how much worse can it really get? And that's how I've felt, seeing a lot of the different bear cases outlined on FinTwit and stuff, is it's like, yeah, that's a good bear case. It's almost as if the market knows about that and priced it in. And and that's a reason that we're down 25%.
Yeah, definitely like you said, people, we're talking a little bit more on a daily time frame here with trading and other pieces, but certainly for those that are investing, I think you should continue to DCA. Absolutely. I actually just made a couple of purchases, so I'm still DCAing regularly. I have a solo 401k and a Roth IRA, and I regularly make purchases in those. You sometimes have to take that emotion out of it, right? Like, I don't even make those purchases. I have a financial advisor on the side, and the money goes into an account, and he makes the purchase on whatever it is, a weekly basis, a bi-weekly basis. I don't touch that money. I don't even see it. I don't even know when the purchases are made, to be honest. I just put it into an account, and he takes care of it, because sometimes you have to remove that. And then on the other side, like you're saying, bonds, like there's some, I never thought I was going to be buying bonds in my early 20s, but I bought 10 grand of iBonds a couple weeks ago because they're paying 9.6%. Like
$3,000. And that's why it's not with the iBonds, and they have the, limit on how much you can buy. So you're not going to get any life-saving changes from it. But if you can put $10,000 and get a free, safe $1,000 or $950 or whatever, why not?
You can put another 10 grand through your LLC too.
Okay, nice pro tip there from Gav.
Just saying.
Yeah, no, I mean,
for some people, 20 grand is a large investment.
Yeah, and a good return. I mean, you get a free 10% at that point. Nice 20.
Well,
nice.
It'll readjust. So you're gonna get that. You're gonna get 9.6% for 6 months, and then in
for
November,
6 months at least. Yeah,
we'll find the rate for the next ones. But yeah, I mean, it's gonna be better than whatever a savings account's paying you.
Oh yeah, DCA. Janice asking is dollar cost averaging. But you did a great. You did what you needed to do there, Gav, and really differentiate from. Yeah, day trading, you need to be cognizant of the bearish trend and that things aren't performing well and these rallies aren't lasting. But if you're just investing, and I always try to make that point in the show too, I'll try to be clear when I'm talking about, investing for the long term versus just trading. Like this Tesla call that I bought, I'm doing it because it looked like, Tesla, I said, is down 17% this past week. Looking at the RSI, we dipped down to pretty oversold territories, at least on the daily. We could see a nice little rally, I think, the next couple days. Does that mean it's going to come? I have no freaking clue. But that doesn't mean I want to buy and hold Tesla stock like Kathy Wood does in this environment. Me and Kathy Wood might technically both have long positions on Tesla right now, but I guarantee you she's way more bullish about the medium-term outlook for the company than I am.
Go back to VIST. Take a look at what happened right when it broke all-time highs.
Wait, I also do have to say though, and I'm glad that we're ripping here on VIST. Looking at the weekly chart, I think we have to fact. Whoa, wait. Oh no, wait. This is we. It looks like we got highs of 1103 back in July 2019.
Oh, I see the 1 wick. Yeah,
The one wick.
Okay.
I just want to make sure. I just want to make sure before we technically celebrate all-time highs, we're really there.
No, you're right. You're right. I think that was like its first week trading, and it
when
looks like
IPOs kind of have crazy day. It's like how
it went up to like 1102. So yeah, we got about 5 cents. But yeah, just for anyone that was on here, hopefully you just grabbed a
bunch of VIST. If you look at a lot of companies like Rivian's a good example of a company that it's the same thing. Second wick, huge wick, never came back to. Well, that's not a good comparison.
I'm in MRO too.
You're in MRO.
MRO as well. Really nice setup here on honestly the daily, the weekly. Like, look at MRO coming through those highs from September. It's got just about 30 cents to go.
I like MRO. I put it in one of my. I put together a list of like 13 or 14 stocks that I liked for 2022 back at the end of 2021, and MRO was in it. I think actually the best performing out of that bunch, because I didn't know. I mean, yeah, of course, I didn't know how bad tech was going to be. So it was like, here are some good value names I like for 2022. Here are some more tech names. So the value ones have held up a lot better. MRO might be one of the only ones that's actually green in that, but tough market environment. So what are you going to do? What are you going to do, Gav?
I don't know, man, but somebody came on my space actually Monday morning and called out the play and called out the setup. It was actually exclusive. I don't know if you've ever had him on anything, but
Who?
Exclusive Trading from Twitter.
Oh, I thought you were saying it was exclusive. Like it was exclusive.
No. Like he goes by exclusive, but he called out these MRO $24.50 calls, and they're up 400% this week.
Oh, so, wow, 400%.
Yeah, he definitely was banking through those.
Sydney, I'll go to the chart for Vista Energy right now. What were you gonna say, Gav?
No, I was just going to say, like, I think this is just such a pure example for people that want to actually get a good view of what really drew me to this. Just go on Finviz real quick, finviz.com, and take a look at the maps section on there. It's free. It's delayed data. It's 15 minutes delayed, but it's fine. And you can just take a look and see which of these sectors today is bright green. And it's energy, right? It's like XOM, SLB. SLB's killing it today. God, I should have gotten more of this. Somebody was calling this out to me this morning. Slumberjay, but basically just taking a look at like, where is that relative strength today? Where's it going? And when you have days where oil and energy and gas start running, they run hard. This is just the sector that they are. There's a lot of money that comes in. So just something to keep an eye on there.
Yeah, no, 100%. I'll give you a stock that I'm watching right now. You're not going to like it from the chart perspective. I like it from the fundamental value perspective, and I think eventually, we might see the chart coming around. Levi Strauss right now getting extremely cheap. Look at this, Gav, real quick. Forward PE 10, okay, whatever. Price to sales almost 1 on the dot. And it's to me, it's like one of those companies that I think even if the economy takes it, like people still got to buy jeans.
So the one thing that concerns me here is, did they just cut their dividend? Because this is a big dividend stock, right? And that's what draws a lot of the money into it. And
let's see. It looks like its dividend yield is about 3%. I'm not sure if they cut. Let's see if we go to our news feed. If they recently, it'll pop up right here.
I don't know if they did it just yet, but I basically just took a look at some of the stuff, and it looks like they're displaying warning signs that historically led to dividend cuts. And
okay.
No,
this is good. I want you to give me the things that I'm not seeing that's going to cloudy my bull case, because
I think this could not necessarily that this collapse a bull case. So just a couple other things. Like I agree with you. There's some good stuff here. Profitable, right? B+, I would say profitability looking pretty good. Revisions, not bad. Like a B as well. Momentum, I mean, obviously it can't have so much momentum with a chart like that. Like it's not like the worst that I've seen. To be honest, if you pull out a little bit, I mean, I guess these 2 last days helped a good amount, but it's been holding this level here for a little bit. But the big thing for me that's gonna be the concern is, when I think of Levi's, this is more of like a value type company, and to be honest, I still think the valuation's a little bit stretched, and I would definitely be concerned.
Yeah,
if
like the
they
forward
did-
PE.
Yeah. And I
Sorry.
would just be concerned if they cut that dividend, because
Got it.
that's like right now I'm taking a look at a couple things like that I look at. Like I look at one measure called dividend safety, and it's their ability to continue paying the current dividend amount. And I'm seeing an F. I look at dividend growth, which is like how attractive is their dividend growth compared to their peers. They're also being given an F, meaning that like other peers are raising their dividend.
Where are
And
those
this
ratings
is
coming from?
Seeking Alpha.
Okay.
Yeah, I do like almost all my fundamental stuff when it comes to like some of these more like niche pieces, like dividend safety. Like I don't know where else I can even find that,
Yeah.
Yeah.
No, and
just
I
one
think,
piece
and I was gonna say too. I mean, with the forward PE being 10, that's cheap, but for a value stock, you can certainly find way lower than that. So it's not. I mean, it's not. I don't think like so screaming cheap that it's a screaming buy yet. I've just been watching it as a potential. Like, oh yeah, that's gotten. Because I mean,
here's the other piece. Insider selling, man. They're not stopping. Their CFO 5 days ago sold $4 million of the stock.
All right.
Like, that's not good. That's not good.
Fine. What are some stocks right now where insiders are starting to add to them? Asana. The dude loves buying Asana stock.
I do
oh wait.
remember,
Oh no. Oh, never mind. I thought he started selling. If Dustin Moskovitz.
Asan was getting a lot, and somebody bought Asan recently, not too far back. They bought it in looks like 4 weeks ago. But surprisingly, one of the stocks that's actually getting the most insider buying that I've seen is Coinbase.
Really?
And most of it's actually been coming from Toby Lutke, who's on their board, has actually been buying up a good amount of Coinbase. And then there's a couple other people as well that were buying. And Coinbase buying has actually been going on for about 20 weeks. And it's a super interesting stock because it has these big moves, just kind of like on a daily basis to the upside or downside. But yeah, Coinbase is one. So in addition to Toby, there were some other people that were grabbing shares. I wish I had a better way to like search. I don't have a great platform. I just have to go specific stocks.
We built out a page for it where you can filter just by buys, but it's a newer page for us, so there are still some slightly buggy. I'll send you the link right now, and that way you can try using that. Because what I like to do on here is right here. Let's see if it's working right now. Because sometimes it'll be a little buggy. What's the best way here? I'll send it in the private chat.
Yeah, I'm just looking through a few right now that I thought might, but there's not a lot. Although another good looking setup, by the way, excuse me, since we're on here, if anybody is in the audience, they want to take a look at it. FANG, ticker symbol FANG. It's Diamondback Energy.
Yeah, Diamond Energy. Yep.
Yeah, good looking setup right now.
Okay. Here, let's go back. Let me go back to my Benzinga Pro. I sent you that link though, so if you want to pop through that and see how it's working in terms of being able to find insider buys and sells. All right, so Coinbase. Let's pull up Coinbase's.
Yeah, it's giving me no data. It says it looks like there's no data for these filter options.
Okay.
I don't know.
You want to take a screenshot of that? Send it to me. We'll get that fixed.
Sure.
That's what we need. We need more product dummies. Not dummies. You know what I meant. Test dummies. Guinea pigs. All right, Coinbase right now.
Morning. Oh, sorry.
We have pre-market prep starts at 8 a.m., which is like the big show that like the serious traders tune into. My show starts at around 11:30 a.m. and it's kind of our midday, just kick back, relax, hang out show. So yeah, if you ever want to hop on the morning show, hop on this one, let me know.
Yeah, absolutely. I'm doing a big morning show tomorrow on Spaces. I got a bunch of CNBC guys coming on. I got their whole options trading team.
Oh, for real?
Yeah, I got Dan Nathan, Carter Worth, and Michael Cow all coming on Spaces.
Okay, nice. Maybe I'll hop in, not as a speaker, but I'll hop in there as a listener.
If you want, you can hop in on the Benzinga account. I can bring you up as a
All right.
speaker. We should have an extra slot.
I'll do that. All right, let's go to Coinbase real quick. So you said one of their insiders is buying. What do you think about the chart overall? I mean, it looks like we found some consolidation around here, and this is what I like to see with stocks is once they get to a point where even when the company like announces bad news and the stock doesn't dip anymore, that's showing me there's demand for that stock down there at that price, kind of regardless of news. And it made a nice base here and has now come up a decent amount from that kind of $50 base, $45 bottom.
Yeah, I think coin has held up way better than a lot of the other stuff in the market since it went down to those lows. Now, there's still concern here. The stock's down 70% over the course of the year. But I think that, most of that concern was maybe like warranted back in like April or the May area. Since then, it really, like you said, it's just gone sideways. I mean, it's unlike a lot of other stocks, it's up from the lows of May, right? And it's continuously shown that it can keep making those moves upwards. And like I said, there is insider buying. I will say though, coin is probably one of my favorite to day trade. Not something that I'm necessarily building a long-term position in just yet. Just enjoy the way it moves on a daily basis. It's always exaggerated moves. And one of the best things about coin is that you can use Bitcoin as a leading indicator to what coin's going to do. So you'll often see Bitcoin just makes these like $500 moves, and then immediately you can go to coin and see that kind of get replicated in a bit of a smaller numerical set. So I like that it's held up really well for the last few months. It makes big moves on a daily basis. There's plenty of volume. I mean, coin gets plenty of volume, and insider buying, and then having a leading indicator like Bitcoin and some others. So I find that to be really helpful when trading it, just because the more analysis and data I can bring in, the better and more comfortable that I personally feel. And then in addition to that, I trade with a lot of other people, of course, on a daily basis. I'm always on Spaces, Discord, whatever it is. And there's other people in my circle that are really big fans of coin. I'll give a shout out. Do you know not Mr. Mansell? Mans from Twitter?
Yeah, I know Mans.
Yeah, like he's one of the best coin traders that I've ever seen. And that guy just even yesterday, he was killing it on every single dip, coming in, buying the pops. So it's a stock I made even more favorable towards because there's people around me that are trading it really well.
Yeah, and I've kind of been a hater of Coinbase's stock in the past, but here's what I'll say about it. And looking at this chart here, May 12th, May 13th, Coinbase was trading at like $50, $55. Bitcoin at the time was trading at 30,000. Now Bitcoin's trading at a third of that, 20,000. And has been trading pretty steady around 20,000. But Coinbase's stock has gone up $20 from 50 to now. So that's showing me that the market is saying, okay, maybe we got a little bit oversold on Coinbase. Maybe we got a little carried away. I can't think of like any other fundamental reason how this stock would be up $20 in a span while Bitcoin was down 33%.
Exactly. It's held up really well with it, and I'm excited to see. I'm not saying anything on Bitcoin if it's going to go up or down. No clue. Obviously, it loves the 20K level, but if we do see a move up where Bitcoin, which we all know in the course of a week it can move 5K, I'm going to have close eyes on Coinbase. Which, by the way, I'm watching coin right now.
That's kind of my point too, is like Bitcoin we've seen kind of consolidate around 20,000. Looks like, I know we've dipped below it and it's scary when we go down to 18 and it looks like holy shit we're going to 10, but for the most part Bitcoin's been trading around 20,000. If Bitcoin gets legs and goes up to 25 or 30 again sometime soon, Coinbase's stock could rally hard.
Yeah,
I would
absolutely.
think. I would think.
Hey, don't look now, but VIST just pushed another %. Just
okay. Okay. Again, our official, I believe, all-time high is again. Oh wait, I think we are at it now. I'm seeing 1109.
I'm seeing now. Apparently, there was a wick up on September 1st. I didn't even see this before. To 1146. I don't know, but over 11, definitely. Looking pretty nice here. 8.5% day. This was up about a little bit over 6%. I think when I came on here. So it's definitely been nice to see.
You're pumping it, bro.
How many people are listening to this live stream?
It's not about how many people are listening, about how much money they have.
I hear. I guess. I mean, I would feel much less comfortable talking about it if it was like 100 million. It is $1 billion market cap. I don't know if we're
Right.
gonna like
I'm fucking with you.
move it
No,
on
I'm
Benzinga.
fucking.
I do have to be careful on my spaces, dude. Like for sure. Like there's thousands of
Yeah.
people coming in an hour, and if somebody starts talking about like some like $12 million market cap, I'm like, no. Like I ain't
Yeah.
trying to
Oh
have
no.
SEC up in here.
Yeah, we've had interviews with companies with like we'll interview the CEO of like a company that's public but like a $30 million OTC market cap, and I'll be like doing the interview and watching it. I'm like, I don't like this. I don't like having that doing it. So, all right, Gav, we've only got about 3 minutes left. Anything else you want to leave us with today? Whether it's overall macro stuff, overall econ stuff, maybe at least tell us where folks can find more from you.
For sure. So I am live whenever I'm not on Benzinga. I'm live on Twitter Spaces under the @wolf_financial handle. So what you see my name on here, just put an underscore in between, and that's my ad on Twitter. It's the verified account, so don't follow any of those other accounts. And thanks to those that have been following me. I got like 20 followers during this. So that's the best place to check it out. I host spaces around 40 hours a week. I did a little bit less today, but I'll be on at around 5 p.m. EST, actually with Mans. And D-Book, one of his friends. And so I'll be doing a little bit of trade prep for the rest of the week at 5 p.m. And then tomorrow, just hitting from the open, 9:15 a.m. live option trading, 10:30 a.m. I'm bringing on a full CNBC panel to talk stuff. And then 12 p.m., hopefully we'll be on together with actually the CEO of Matthew Berry's fantasy company discussing some NFL prop bets, players for the week. I got to do a little bit more research there. I'm still kind of like in waiver mode right now. So I need to look ahead and figure out for the rest of fantasy and everything else. But yeah, that's the best place to find my stuff.
I know I kind of screwed up and didn't do my waiver stuff. I've got the Wolf. I've got the Twitter in the chat. I'm gonna drop my Twitter in the chat as well because Gav got nice, 20 followers during this show, but I haven't yet. So I'm gonna drop mine in as well. What else? Was I gonna say? Oh, I was gonna tell you on the sports betting side. You know what I did for the first time last night? I didn't hit it, but I placed an MLB parlay that was a parlay of correct scores. So I had like the Cardinals winning 6-5, whatever. It didn't hit, obviously, but it was literally like a $5 bet to win like $1 million. That's kind of a fun way to bet,
Interesting.
Yeah.
Yeah, no, I mean, those are cool. I love that they do stuff like these no sweat, same game parlays and, all these different pieces. I'm a big FanDuel fan just because they sponsor Bill Simmons and I love Bill Simmons.
Okay.
So they kind of get my support. Hopefully one day they'll sponsor one of my Twitter spaces. We'll see what happens. Maybe my space with you.
Yeah, I was gonna say if
point.
we do this every Thursday throughout the football season and keep growing it and get people in there, I'm sure we can find a sponsor.
For sure. But there's so many fun different pieces that you can combine on there. They give all these really cool props and weekly specials and games. And obviously we didn't even go over like spreads or anything today, but so much fun to see everything that's going to happen. Especially like once you get into like week 6, 7, you start really getting a feel for it. Like you have data sets, you kind of know who's going to be good or not. So I'm super excited to get into it. Obviously we're only at week 5 right now, but big game for my Ravens this weekend.
Yeah, tough couple. Is that 2 losses in a row at home that they've blown a lead?
So they blew the lead in both. I was actually at the Dolphins game. At the Dolphins game, like front row Ravens sideline, like 20 feet behind John Harbaugh. And they were up 25 or something, like 21 going into the 4th quarter. And I watched them blow it in person. So that was rough. And then this week they blew it to the Bills. Not as bad. They hung with the Bills, which I think says a lot. But we'll see what happens. We got Sunday Night Football this Sunday, though, against the Bengals. So division rivalry.
Hell yeah. I'm hoping for fireworks in that game because I have a lot of fantasy players on both sides of the ball there. Gav, enjoy the rest of your Wednesday. I'll see you tomorrow, 12 p.m. on the Space. We'll be broadcasting the Space on this show, so you can tune in via the show. You can tune in on the Space. We're going to give you guys options. Either way, we're going to have some good football content for you tomorrow, Thursday. Gav, again, thank you for taking time out of your day to hop on the show. Enjoy the rest of your Wednesday.
My pleasure. Take care.
Peace. All right, guys, that was Gav. Give him a follow. Hit the link in the chat. We'll be back with Gav tomorrow. That was a fun little, we were supposed to just test, but we ended up doing a whole little interview segment thing. So, all right, guys, that'll be a wrap for our show today. Money Mitch will be starting up right now. He's going to be talking to Louis Cordone, the Senior Vice President of Data Strategy. So if you're a data head out there, if you like data, make sure to stay tuned to Mitch's interview coming up at 1:15. Peace and love, guys. We'll be back tomorrow. Also, I don't know if this stream is going to end, so it might be a little awkward here. Just going to get out and